Hey investor friends, I'm Michelle Markey, and today I'll share how the Oracle of Boston, also known as billionaire value investor Seth Klarman, who runs the Baupost Group hedge fund, is investing in 2022 based on his recent letter to shareholders and the highlights from that, because I don't have access to his actual letter, as well as his recent 13F filing equity holdings as part of the Baupost Group. And as part of the letter, he warned that we are seeing deep complacency and stretched valuations in the market, along with a whole host of other looming risks that include mounting inflation, as well as interest rates that will be higher and will pose a real threat to financial markets. So with all that, if you also enjoy studying some of the best investors like Seth Klarman, I'd love if you could please like and subscribe to my video and YouTube channel, because the more we arm ourselves with knowledge and knowing what some of these best super investors are doing, then we can also make better financial and investing decisions as well. So thanks. If you're wondering who Seth Klarman is, let me give you some background information. And he is a 64-year-old value investor who follows the investment philosophy of Benjamin Graham, who is the Columbia Business School professor who taught Warren Buffett. So just like Warren Buffett is nicknamed the Oracle of Omaha, Seth Klarman has been nicknamed the Oracle of Boston accordingly, because their investing styles are kind of similar in trying to identify undervalued assets and trying to buy them at bargain basement prices, or also known as having a margin of safety when you're buying undervalued assets in the hope of getting some profits. And some of what has also been termed Benjamin Graham style investing is what's called a cigar butt style, and that is where you're trying to invest in some companies that are on their last legs, hoping for some last puff of profits. And that's basically all you can hope to get out of some cigar butt companies that Ben Graham was famous for investing in during the Great Depression. And I'm pretty sure that Seth Klarman and Warren Buffett have evolved somewhat from the Ben Graham style of investing, because a lot of those types of companies are not as common as they were back then. So inevitably, someone like Seth Klarman, even though he's a renowned value investor, he also does all kinds of different investment strategies as part of his hedge fund. And he also founded the Baupost Group as a private investment partnership back in 1982 when he graduated from Harvard Business School with an MBA, and then at the age of 25 started this with a Harvard professor and a few other partners. And the Baupost Group has been able to get compounded annual returns of between 19 to 20% per year, which is pretty amazing. So even though in 2020 the Baupost Group only returned 5% compared to some other industry hedge funds returning 11%, we can see that Seth Klarman is actually trying to stay true to his value investing principles. And there's a very important reason why he didn't generate as much returns, and it's primarily because he's holding a ton of cash. So the Baupost Group hedge fund has about $31 billion of assets under management, and a third of that, or about $10 billion, is in cash, and another $10 billion is in equities. So that leaves another $10 billion that Seth Klarman is investing across a whole slew of varied strategies, including in commercial real estate and hedges and some other kinds of securities that I'll get into soon. And we can see overall that Seth Klarman is trying to hold on to a lot of cash, just like Warren Buffett is, where Berkshire Hathaway has about $150 billion of cash, and that's about 13% of the overall Berkshire Hathaway portfolio, because Berkshire Hathaway as a business is currently valued in the markets at $713 billion. And then Berkshire Hathaway also has $293 billion worth of equity holdings. So when you combine all that at over $1.1 trillion that Berkshire Hathaway has under its belt, we can see that Buffett only has 13% in cash compared to how Seth Klarman is holding on to about 30% in cash. So that is a little bit different, as well as how, even though at face value we think that Berkshire Hathaway has a lot of holdings, just like Baupost Group has a lot of holdings, if you look at their top holdings, they tend to be much more concentrated. So I'll also talk about all of this shortly. So while I'm on the subject of concentrated equity portfolios, let me quickly bring up how both Baupost Group and Berkshire Hathaway are fairly concentrated equity portfolios because you don't see them investing in a bunch of mutual funds. They're actually invested in company stocks. So we can see that some of the top holdings, if you look at the positions that are at least 2% of a position in each portfolio, we can see out of Berkshire Hathaway's 43 equity holdings that its top 8 are having a position of at least 2%. And then if we look at Baupost Group's 52 equity holdings, that its top 16 have an equity position of at least 2%. And then Berkshire Hathaway's top position is Apple at about 43% of the portfolio, whereas Baupost Group has Liberty Global at 15% of its portfolio as its biggest position. So we can see that in a lot of ways, Seth Klarman is a lot like Warren Buffett, even though he's a little bit more diversified than Buffett seems to be, with way more companies in the equity holdings. And we can also see, based on some of Baupost's recent Q4 2021 activity, that Seth Klarman has been selling way more equities than he's been buying. So some of this is foreshadowing what he believes and what is shared in his letter to shareholders, and I'll get into that as well. When it seems like so many people are making money in the stock market hand over fist, Seth Klarman and Baupost Group have come under some criticism in the last couple of years because Baupost has been underperforming the S&P 500 and maybe some other hedge funds. And a lot of people are frustrated that Baupost Group is holding on to so much cash, and that's what's leading to maybe some of the underperformance that some people don't like, and that's why maybe some allocators are walking away from investing with Baupost because maybe they think they can get a better return elsewhere. And yet Seth Klarman has been defending his value investing approach and also the amount of cash he's been holding on to, and saying that the time for value investing will come again soon. And he's been defending this even 2 years ago, and I think what he said back then is still relevant as ever today, where he's going against the grain of the conventional wisdom of being fully invested by having so much cash on hand. And he said that unless the opportunities are truly and historically compelling, full exposure in this environment seems dangerous given prevailing lofty valuations, and should corporate earnings weaken, record high profit margins shrink, markets falter, or inflation picking up, driving central bankers to reverse current easy money policies, the downside from here could be quite significant. So I think that it's important that we heed what Seth Klarman is warning about, because even though he gave that warning back in 2020, he's echoing some of the same warnings now in January 2022, going into February. So I think that this is also something to really pay attention to and beware, and maybe see if we can also emulate some of the way that Seth Klarman is investing right now. And underperforming the stock market is nothing new for Seth Klarman, because his Baupost Group once underperformed the S&P 500 for 7 years in a row in the 1990s before eventually overtaking and outperforming. So for Seth Klarman, he's not worried at all about holding on to a bunch of cash when he sees the stock market as more expensive than what he'd like to invest in. And in the meantime, what he's also been especially up to with Baupost, and maybe in lieu of investing in stocks directly, is actually doing more investments and lending in commercial real estate, as well as private equity, and also doing some private credit financing, and also investing in preferred stocks. So it seems like in the Baupost hedge fund, there's plenty of investing strategies that still continue to generate returns for them nonetheless. And among the highlights of Seth Klarman's recent shareholder letter, he especially emphasized the importance of hedging, not to achieve gains, but rather to protect the value of your assets. So he purchased hedges to protect the assets of Baupost Group, and he issued a dire warning if the political strife continues the way it has been in the US. And he likened the speculation in the markets to roach motels. So that's kind of gross, but I'll tell you what exactly he said. And he said all this because the buying frenzy of the past 12 years has lured many market participants into speculative holdings that someday will seem like roach motels easier to get into than get out of. And against a backdrop of relentless money printing, cue Jerome Powell, a very active Federal Reserve and fiscal largesse, many investors have been lulled to sleep, unaware of and unfocused on risk. They are like the cat that didn't jump on the hot stove. And he also said, we often have success searching through the abandoned property bins of the market. It is said that bull markets always climb a wall of worry as the cautious are left behind while the intrepid get ahead and the reckless lead the pack. But the opposite may also be true. Bear markets must inevitably descend a mountain of overconfidence and hubris. And he said that volatility can actually be useful, and I think that's part of his hedging strategy because it is a driver of opportunity creation. Volatility should more properly be considered a value investor's best friend. And he also talked about his investing philosophy more, where it only takes one moment of overconfidence, distraction, or sloppiness to undo a lifetime of painstaking compounding. So he's pointing to where we are in the markets right now. And he said that it generally makes sense to insure your home against fire, even though it probably won't burn down. No one reasonably laments having paid a modest insurance premium for a casualty that didn't occur. You don't hedge or insure to achieve gains, but rather to hang on to what you have. And he also pointed to our political strife in saying that democracy is a precious gift that we have inherited from our forebears. Unfortunately, it comes without operating instructions or a warranty, and as with anything breakable, democracy must be handled with care. And it's time to once again heed Benjamin Franklin's prescient warning about the government that the founding fathers were creating. A republic if you can keep it. And in an ever more polarized America, incapable of peacefully bridging our divides, may someday cease to be a reliable destination for investment capital. So a lot of this is trying to point to where he sees the risks in the markets right now, and he's trying to protect Baupost and his assets by doing some hedging strategies. And what this might mean for some of us retail investors is maybe we sell some cash secure puts for some stocks that we might be interested in that maybe we think will be on sale at a certain price, but maybe it's not on sale right now. So that might be one way, if you have the cash laying around, to potentially do some hedging strategies that way, as well as if you have some free time, maybe you might be willing to drop a low price of a few $1,000s to buy the Margin of Safety book that Seth Klarman wrote in 1991, and there aren't many copies around, but maybe you might happen to come across a copy of it someday. I have not yet read it, but I think that I would like to read a little bit more about how Seth Klarman likes to invest and to try to see if there are some applicable strategies that we can use in whatever market conditions may manifest in the coming months or years. I think that he's bound to be right again someday, and even while he's been underperforming, maybe someday his value investing principles will prove to be as relevant as ever. So I think that between what I suggested, maybe doing some form of our own hedging strategies, and also continue learning so that we're as armed with as many investing strategies as possible. Current conditions in the stock market are a lot like what Seth Klarman has said in the last couple of years, in which he said that the low interest rate environment served as the rocket fuel for expanding valuations in stocks that aren't sustainable. And he also said that he likes to look for investment opportunities that are considered to be like twisted apples that may lack broad appeal but can still deliver a sweet fruit taste. So he thinks that when the market corrects some of the mispricings we're seeing in stocks, that it will be the twisted fruits that will prove to be the smartest investments. And it may be fitting to end on a Buffett quote that Seth Klarman has repeated in saying that price may be what you pay, but value is what you get. And if you enjoyed this video or learned something, please like and subscribe, and let me know in the comments if you've studied Seth Klarman and what you think about his approach. I'd love to hear from you. Till next time.